you know, I'm a big crypto person. I'm the one that probably helped crypto more than anybody because I believe in it.
Mr. President, please do something about the price if you love crypto so much. This week, Bitcoin hit minus 40% from all-time high.
It's fallen about 12% in the past 7 days alone.
Now, after the meltdown that happened over the weekend, Bitcoin put in its lowest weekly close since the start of November 2024. As you can see on the chart, this candle here, right before we got that massive pump when Trump won the election, was the last lowest weekly close since we got this candle coming down for Sunday's close.
Bitcoin is going to zero. Zero.
Now, even despite that, we haven't swept the April 2025 low. This low that came in last year on the Trump tariff fears when the bottom was marked before we went on to a rally to new all-time highs. The price action did not sweep that low, and we actually put in an equal low to it. Now, another thing you'll be able to notice on the chart is that we went below Michael Saylor's entry. We came all the way back to break even, and it even slipped below it.
Bitcoin could go to a dollar a Bitcoin. We're not getting liquidated. We're just going to buy all the Bitcoin. If it goes to $1 a Bitcoin, then it's going to go back up again.
Which, of course, sent Saylor into a negative P&L before the price rebounded. At the moment, they are 3.5% up, just under $2 billion. But of course, this is retracing tens of billions of dollars of unrealized P&L that was on the table above 100k towards 110, 115, 120k at the time. Now, discounting Michael Saylor's position and strategies, unrealized P&L fall down. Where are we in terms of the Bitcoin high time frame? Well, what we have suffered is the biggest pullback that we've had so far this cycle. This pullback here, minus 40%, has eclipsed any other that we've had during this cycle. So that eclipses this pullback here, this pullback here, this one back in 2024, this one that we got last year on the Trump tariff fears. This one is the biggest, and looking at the moving averages, we've also had some pretty key losses as well. So we already know about the 50. We lost the 50 back in November, which had held as support all the way up on these dips that we've just covered. But then we came down, touched the 100, and as you can see, the 100 was used as strong support all the way along that consolidation and when we got the bounce earlier this year. However, we then went to lose it, didn't we? We lost it on last week's close, which then plummeted us below the 100 weekly moving average and leaves us in this void between the 100 and the 200 weekly moving average, with the latter down towards 60k. Now, that doesn't mean that we're going to go down to the 200 weekly moving average. All it means is we've got two pivot points on the chart to watch out for while price trades in this massive void. That's nearly a 30k difference, obviously, between the 200 and the 100. And when we do get interaction with it, it will be key. Whether that's coming up and rejecting from the 100 weekly moving average, reclaiming it, from then we can look towards a test of the 50 weekly moving average. Or if we do get another leg down, eyes on the prize, and looking at the reaction on the 200 weekly moving average. But breaking it down as simple as possible, we are in weekly demand. If you go to the daily chart, the weekly, or even the monthly, we are in demand because this is where price found its low back last year and then bounced. And from here, we only really need to start looking down towards that 200 weekly moving average if Bitcoin breaks down and starts holding below, and then obviously starts heading towards 70k, sub 70k. Then the 200 comes into play. And of course, then we'd be back looking at where we found support back in 2024 too. Now, following the drop over the weekend, what we got was a huge CME gap created. This CME gap goes all the way up to 84.5k, which does create the possibility for a strong Bitcoin bounce from here if we are to go on and fill in the gap. We have started to do so slightly. As you can see, the gap was created down here at 77,750, and we've started to fill it slightly around 2k and above. But the expansion to the upside could take us another 5k higher from here if we go up and fill this gap and come in to that 84.5k region. Now, the one thing you can say at the moment is at least Saylor is still in the green or around break even. Tom Lee's Bitmine is minus 39% at the moment, losing $6.5 billion of unrealized P&L. So far, Ethereum has put in 5 red monthly candles, which does equal last year's run when it dropped all the way back down towards $1,500. That put in 5 red monthly candles in a row. Currently, we're at that. If February was to close red as well, then that would put Ethereum's longest decline since 2018, when we had the 2018 bear market. And Tom Lee himself has had his view on the current situation around crypto.
When we have gold and silver doing so well, especially at the start of the year, that created FOMO. And that was like a vortex sucking all risk appetite towards the precious metals trade.
And the Ethereum bull has also said that he believes that the bottom is in and it's time for upside.
Are in place for crypto to be bottoming right now because we're getting the level.
Now, speaking of metals, it's pretty remarkable what happened to them last week. We just looked at Bitcoin at the start of this video, pulling back 40% from its all-time high over the course of 3 or 4 months. Silver did that in 2 days. It was the wildest price action that we may ever even see on commodities.
It cratered 27%, the most on record.
Now, during times like this, it's important to remember that we are just in a phase of pullback in the markets. It won't last forever, and eventually Bitcoin will turn to the upside again and we'll get some green candles. But looking at something like this puts everything in hindsight. Bitcoin has been declared dead 457 times over the course of its history. And if you invested $100 each time, you'd have $82 million today. And rolling on from that, we will start to see more headlines, whether it be panic, fear, or just general FUD. This time, we have got an actual fact, though, is that Bitcoin miners are coming back down towards their break-even price. Miners aren't something that's really talked about in crypto that much anymore. It's all about ETFs, treasuries, and everything else, isn't it? We don't really talk much about the halving and miners anymore. But it's important to remember that this isn't anything new. This has happened multiple times over the course of Bitcoin's history. When Bitcoin does get a deep pullback, miners go into the negative, and a lot of them weather the storm. A lot of them just carry on as normal, knowing that eventually they'll be able to sell the Bitcoins higher. But stories like this is what you'll see more and more of. Now, this isn't FUD. This is an actual fact. This is just explaining, obviously, the situation that miners are in. But we are coming towards that time, particularly with Saylor coming down towards break-even and other events, for where we will start to get max fear, max panic in the market, which over the course of history, we know, looking at the Bitcoin is dead chart, creates great buying opportunities. Now, please do make sure you drop a big like on the video. Do make sure as well, I want you to comment in the comment section, where do you think that we are in the market cycle? It's up on screen at the moment. When you're looking at the Bitcoin chart to the left-hand side as well, let me know what stage you think we're in, whether you think we're in belief, whether you think we're in hope, or whether you think that we're on the way down and we're in anxiety, denial, or even panic. And alongside that, do make sure you attach the emoji of a chart. Now, if you think that we're still on the left-hand side of the psychology chart, put the little up chart emoji. If you think we're on the way down, put the downside chart emoji, so I know that you've also stayed right to the very end and got the secret emoji for the comment section. But thank you very much for watching this video. Please do, again, make sure that you drop a like and drop that comment, and I'll see you in the next video. Bye for now.